Nasdaq 100 plummeted sharp last week again after a reversal sign 3 weeks back. We have seen three bearish candles in succession, and also it has come towards the support zone from where we have seen this rise towards 18,300, 18,200 zone. Now, can this support sustain, or with the recession fears looming in US, there is a further crash awaited in the coming week? What is going to be our strategy in order to profit trading Tech 100 in the coming week? We are going to see with the help of charts and indicators. Also, we are going to look at the holistic picture of what to expect from the markets in the month of August. This is a weekly and monthly review. I do share my twice a day updates on Nasdaq, first with the Asia and Europe session, next with the US session. So do subscribe and press the bell icon. Do like, share, and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's start. First, we'll look into hourly charts. First, we'll look into 4-hour charts, and towards the end, I'll be sharing the trading levels and strategy. Do watch till the end. Let's start. Now, see, I've shared this thing in my daily updates and my weekly updates as well. This was the time on the 4-hour charts also. Last major bullish crossover was in May, and for 2 months, it has traded consistently bullish, seeing just two dips, and this is the major sell crossover which we had seen 3 weeks back. There was a reversal sign on the weekly charts as well, and since then it has been trading in this bearish channel here. It has almost hit the lows here. So can we expect a bounce back or a retracement towards the top of it? That is the question which we will try to find the answer. And yes, breaking below this zone, that is 18,200, certainly we can say more bearishness awaits here. Right now, yes, after every dip we see a retracement. Possible that retracement can be expected, and it can try to move towards 19,000, 18,800 to 19,200. This is a zone which is going to play a major role now. If you look at the stochastic, this is rising, and see, beauty of the analysis here, I have mentioned last week in my update in my weekly review that 19,600, 800, as long as it stays below this, you can sell again. This is what has happened. Stochastic rising from the oversold. MACD has traded sharply bearish. It can possibly converge and bounce back. RSI has also come to oversold zone on the 4-hour charts. Thus, a little retracement can be expected, but not a reversal. Now, look at the day. On the daily charts, I can see a major crossover on the buy side here at 2023 beginning. Since then, this was the rise, good run here. A minor retracement was seen. Then again a rise, and then a minor retracement, then again a third rise. And see, this time the gravity of retracement here, it was gradual, here it was moderate, and here this is sharp enough. Now this appears a very sharp correction here, and also there is a crossover here after a long time, and this is happening after 4 to 6 months on the daily chart. So this is certainly a bearish sign, and now this zone becomes crucial here. Look at the simple moving averages, these are trading with divergence. The exponential moving averages, these have just crossed over, and thus this is the prime resistance zone. I do not think so that 19,600, 800 it will break soon, but yes, a little retracement towards 18,800, 19,200 zone can be expected. Now if you look at the formation here, what has happened after forming a symmetrical retracement towards the 20 period, then a sharp correction. And remember, this is just the second bearish candle and a breakout candle as well. So now in the first trading session in the coming week, if you see it dropping below 18,200, certainly more bearishness will prevail here. Where are the supports? 18,000 is the next milestone. Very, very strong support at 18,000 exists. And why this zone is a support, you can see with this. This was the zone where it has traded for weeks, consolidated here for weeks, and thus it is going to remain a good support as well. Below this, the next targets are far below towards 17,400 and 17,000 levels. Stochastic looking downwards on the daily charts. MACD, after hitting the peak at this point itself, I have mentioned that it is coming. This crossover is coming at extremely higher levels, which we had not seen on Tech 100, and thus the downside awaits, and that is what has happened. A sharp correction is seen here. RSI has dropped to bottom, coming to the week. Now what we had seen on the daily charts is replicated here after 2 years, staying bullish and divergent. Now finally it appears that the moving averages might converge, though on the weekly charts there are no signs of conversion yet. If you look at the last 3 dips, first rise and the retracement, then the rise, then the retracement, and this is the third time it is trying to retrace. Also, if you connect the dots here, you will find that this is an expanding triangle here. It has to come out of this, which means it has to stay below 18,000 levels in order to confirm a breakout here out of this bullish channel or an expanding triangle. Below 18,000, we will look forward to 17,400 and 17,000 levels in the month of August. And remember, when it was rising, we did not question the reasons for rise. We have seen multiple bullish candles in succession, 8 to 10 candles, 8 to 10 candles of bull run, then a minor retracement, 20 candles of rise, and then a minor retracement. This time, see, this is very, very sharp. Look at the retracement here and here. This is something different. And the stronger the rise, obviously stronger the fall. The stochastic has come to oversold zone. Another thing to note here is that when it went to overbought zone, it stayed there for a while. Now it has come to oversold zone. It can stay here for a while as well. The MACD, now this is another interesting observation. See what I had mentioned few weeks back and last week as well. See this. Now this crossover is coming at an extremely higher levels. Historically, these levels on weekly MACD is not seen. What you can see a triple top and what you can see a blank space there on the downside. Thus, it is at a critical junction. We have to be careful. The higher you see it at, the higher you can sell. That is what, yes, it may test you with your patience, and you should not be deterred with it. Sell the rise for the near future. That is what it appears. There is not much of downside available. RSI dropping sharp from the overbought zone. Coming to the month, look at the monthly charts. The rise, the retracement here. And if you notice, the rise here post COVID drop was such a significant one. Coming off from the lows at 7,000 to 6,000, we have seen it rising towards 16,000, 17,000 levels. Then you can see a very sharp plunge are observed for almost a year here, where it has in fact gone towards 10,400. And from 10,400, it has yielded 100% return, moving towards 21,750, 760 zone. So this is a 100% yield in just couple of years. You can see this at the bottom in October, November 2022. And since then, it is just trading bullish. Now, look at this 100% return means if you count, this is right now at 31% retracement. Sorry, the 30% retracement levels are close to 17,400. That is going to be the first target. The 50% is going to be there at 16,000 levels. That is going to be the next target. Now, this possibility exists that it can continue to travel towards these levels here. Now, if you look at the monthly charts, I will say that still the month has just started and it has already raised the gains for last couple of months. However, till now, the possibility of a reversal exists here. Yes, it can show you swings. These are markets. Anything and everything is possible. The picture it shows to you may not be the right picture and it reverses. However, once it breaks below 18,000, the chances of reversal will be less. It can move towards 17,400 or in fact lower levels before retracing. Yes, it could erase the gains for last 3 to 4 months where it can move towards 17,400, 17,000 and then close somewhere here at around 18,000. With the rising volatility, now the movements are going to be volatile as well. See the rise, the retracement, the retracement could be sharp enough. Where is the 20 months average? It is right now at around 16,500. The simple moving average at 16,000. This is going to be the possible targets for the near future. When I say near future, maybe 3 to 6 months. Now see this, it is still trading in this bullish channel and thus 18,000 is one critical milestone for it to break. The stochastic dropping from the overbought zone. Now look at the MACD. MACD has traded with divergence for months. It is just trying to converge, not yet crossing over. A crossover will lead to reversal. RSI dropping from the top. So now we have seen the charts, you've seen the indicators. Time for me to give you the trading levels and strategy. And before I give you the trading levels and strategy for the month of August, if you want to learn this art of trading, join my mentorship batch. If you just want to trade as per the signals, be a part of my signals channel on Telegram. Write an email or connect with me over Telegram for your queries related to the services. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. And those who had asked me to recommend a broker, the recommended broker link is also there in the channel and video description. It offers you a SAF-free account, lowest spreads and no hidden charges. Do not miss to join. Considering this, first let's talk about the levels to buy. You can buy here at 18,440 levels, but then 18,500, 520 first resistance zone, very strong resistance exists here. Be careful at around these levels. Then beyond this, 18,550 and then 18,610. These are going to be critical levels for Tech 100 to break past by. Till 18,600 it has got enormous resistance on the upside. Beyond this, it can try to move towards 18,800, which is the next critical level for it to break past by. And as we have seen on the 18,800, 19,000, 19,200. This zone of 400 points between 18,800 to 19,200 is where you have to be extra cautious and alert here. It can try to move towards somewhere in this zone. 19,150 good resistance, 19,100 very good resistance, 19,200 the ultimate one. So these are the key levels here. Not necessarily prices can reverse any point of time in between these levels. As long as 19,200 is not taken, we should not be treating Nasdaq 100 for a buying entry. We should always be trying to sell the rise. As long as it stays below 19,200, just mark these levels. And when I say it is sell the rise till then, you have to be careful. Even beyond this, 19,600 is one level, which I think it is going to be difficult for Tech 100 to move towards these levels. That is 19,600 specifically. But if you see it at these levels, certainly a reversal will be there. On the downside, where to sell? You can sell here at 18,320. Expect it to move towards 18,260 and 18,200. Once it breaks below 18,200, we can say that the bearishness will increase here. Chances for it moving towards 18,110, 18,000 levels rather I will look at. And below 18,000 levels, the next target is towards 17,840, 17,720 and then 17,600 and then in fact 17,400. Now 17,400 is going to be very, very critical for the near future. Now see, we are talking about 1,200 points from the current, or rather 1,000 points from the current levels, 18,400. So looking at the moves, it is possible that it can cover up in this distance in couple of days itself before bouncing back. And thus you have to be cautious and careful here, as and how it breaks one of these resistances on the downside, specifically below 18,200, 18,000 levels. The bearishness will increase, and we can see a sharp correction before it tries to bounce back. So take your positions accordingly. Like, share, subscribe, and comment. Do not miss to watch the daily updates, twice a day updates rather. Then subscribe and press the bell icon. Thank you. Have a great profitable trading day and trading week and trading month ahead, and a happy weekend.